Good morning, traders. We write Thursday, February the 20th. Welcome to another Flow Show. This morning I was a bit surprised when opening my PC, as you can see. I actually don't use ChatGPT. I just found it funny to put this one up. But there's been a lot going on, and there has been a massive amount of headlines coming out since we left each other yesterday. So I'm going to try to recap a little bit what's been said and commented yesterday and overnight. And obviously, we have to start again with the Trump, Ukraine, Russia, China geopolitics again, because there's been a lot of comments out yesterday and overnight. First of all, we had comments from Putin, and they were also supported by the Kremlin, and they're still commenting on what Europe or the UK plans to do, trying to get some peacekeeping or sending troops, and it's really not for the likings of the Russians, obviously. But in the meantime, there are meetings planned, whether it be between Putin and Trump, but also Macron and Starmer, UK Starmer, are planning to go to Washington the coming week to talk about obviously the Ukrainian situation and I guess a bit of trade as well. But the Trump lines yesterday were, well, it's difficult to put them in words, but they were not really positive, especially not when it comes to Ukraine itself and President Zelensky. I trust you've all seen the Trust Social posts that Trump sent onto the waves. Um, Really diminishing or trying actually to really hammer Zelensky and painting Zelensky into a corner, calling him all kinds of names, saying that's his fault that he hasn't been to negotiations so far, that he could have showed up. But then again, he wasn't really invited, was he? Um, so that's where we are now. There are, as I said, a lot of meetings planned, so the situation is still very fluid. But what comes out of the U.S. administration is really threats to stop really all support down there. And what I've been discussing already is that it could all end up being a just being a huge bill for Europe to pay if Europe needs to go into the protection of Ukraine itself and trying perhaps even to have some rebuilding efforts. Just the latest headline dropping on the Ukraine is that Spain's Premier Sanchez is planning on a visit to Ukraine early next week as well. So it does seem that where Europe was like trying to scramble and finding unity or ways to do something, now they really start to move because we heard from Macron as well. So this situation is not done yet. Nothing is done, obviously, and we will see in the next few weeks what's going to come out of all of this. Um, and then we move on to the more local side of things. Actually, no, I'm going to stay on the international front first of all, because there's been an update on some of the official pages in the US concerning China, and it's really all good and all bad at the same time. Um, First of all, those updates on their webpage, they were talking about the trade deficit, about practices in China not being right, etc. But on the other hand, Trump is saying that there is a deal possible with China and that Xi is a good mate of his. So um, it's still an ongoing situation there. But and I want to come back just very briefly to what I thought that may happen this year. And if you go back onto our ForexAnalytix webpage, you will find those expectations of us on there, where there would be a lot of twists and turns. But my view was that with China, in particular, looking at the relationship, which is not always laid open on the table or for everybody to see, but the relationship between Trump and Xi is less bad than it really seems in my opinion. And there could be a possibility for a trade deal coming. The market is trying to react to it. I may have a quick look at the dollar China a little later. Um, but it does seem to start to shine through that there may be somewhere down the line a deal coming there. At the same time, China is trying to talk sweet to the European Union because who says tariffs says, of course, they need to find perhaps other avenues to sell their products. So they're trying to play the different sides of the game and also trying to lure the European Union to find some deals over there. And I think I've seen one of the officials that is very soon going to talk to Chinese officials as well. So this situation um, could could actually end up being, if we look at it from a neutral point of view, not too bad for China because they could have some half victories here and there. But that still remains to be seen, obviously. But it does seem to filter through that people are trying to talk to each other on that front as well. So. Regarding those trade plans, EU Sefcovic was also on the wires, saying that he doesn't. Well, the EU doesn't think that the trade deal with the US is unacceptable right now, but they want to continue to negotiate with the US on level playing fields and. They're interested in making deals for mutual benefits. And a little bit of sideline, we had a headline dropping this morning as well in from the Mercedes-Benz CFO saying that they have the potential to localize production into Tuscaloosa in Alabama, and from there, from the US, they would export then top-end vehicles to China and SUVs to the EU. So it's another sign that Trump is sort of getting where he wants to get with a lot of parties, trade relations, and gradually, one by one, they're all willing to come and sit around the table to negotiate deals with Trump and America because it's just such a big market. So I mean, things are on the move. And it does look that if we look at from the deal-making point of view, Mr. Trump is kind of getting where he wants to be. The geopolitical side, we leave that in the middle right now. The situation is still extremely fluid, as we know. Um, More on the local side than in the US, because there were, like as I said, a heap of headlines dropping. Trump said that his administration is considering returning 20% of savings identified by Elon Musk's Doge to the Americans, and that would be going towards paying off some debt. Now, on the other side, he's planning tax cuts for all new incentives, whether it be on manufacturing or oil or anything, which could amount to nearly $4.5 trillion, which is I don't know whether Musk's Doge initiative would even start to cover the beginning of repaying or compensating for those kind of tax cuts. So that's another thing where I'm a little bit in doubt that these give and take on tax cuts and budget spendings, because he's also asked the Pentagon to come up with a sweeping budget cost cutting exercise. Still not sure whether this is going the one is going to compensate for the other, really. Um, and then another headline is that obviously he is now pushing the House to come up with a big, beautiful bill under which um, there would be some real restrictions on migration, obviously, but it doesn't suffice the bill that the House was presenting or trying to vote for in the upcoming days. He wants something really, really bigger. So they are best going back to work to find out something else. I'm just trying to keep all those headlines short today because there's really been a massive amount of them, and I'm just trying to get through the main ones. Yeah. Um, in Europe, Schnabel was on the wires, then going to the ECB. She said yesterday that it was possible that we would come very close to an end of the rate cuts right now. That's a bit going against what she actually said earlier, not specifically wanting to continue with rate cuts, but saying that it was still possible to get somewhere to neutral in the not too distant future. But yesterday she ate her words a little bit, and she said that obviously being data dependent, it would be possible that they are getting closer to the end of the rate cuts. Stournaris was not really agreeing with that because he was out on the wires this morning saying that ECB rates could fall actually to 2% this year. So we can see quite a bit of disagreement popping up again between different ECB members, which is for sure not going to make the task easier. We're still quite above the neutral rate, but if Stornaris gets it his way, we would be bang smack in the middle, around 2% there, of what they would expect as being some neutral rate there. Um, what else? Yesterday we had also some more Fed comments out, and then that brings us to the FOMC minutes. The FOMC minutes was really, as I said on the chat yesterday, as expected, really. I mean, caution, bumpy road on inflation. They need to see more progress. Some even said that they might not be too far off of the market neutral. Um, what there was one interesting line though that depending on what the fiscal picture would look like, they may have to pause the balance sheet runoff a little bit, and that could be an interesting one if one of those days we hear from maybe Powell or the deputy governor saying that the balance sheet runoff could be slowed down. And so we had Bostic pretty much repeating what was in the FOMC statement. They need to also have to see how the consumers react to any tariff-led price hikes that the businesses would pass on to the consumers. Because we know, obviously, that the Fed is very, very closely looking at what the consumer is doing over there. And if there would be signs that the consumer taps out on tariff-led price hikes, that is something that they may have to react to at the Fed. So that is one of those data dependency issues that they are going to clearly watch very closely. Um, Jefferson said more or less the same thing. They can take more time for the next rate decision. He did say that the household balance sheet is still in good shape right now. Goolsby came out. Well, I mean, okay, moving on. And that is for the FOMC. We're moving over to OR. As we know, yesterday the RBNZ cut 50 BPs, and then he, in the statement and afterwards, also said that the next rate cut may be a smaller one, that the market is kind of in line with what they expect for another couple of 25 BPs cuts. He added a few lines yesterday evening, saying that the Kiwi exchange rate is broadly at fair value for what the RBNZ is concerned. That there are still inflationary pressures, but they expect those pressures to wane and that inflation will fall. He did say, though, that he expects a dampened, subdued business investment picture going forward this year, but it would take an economic shock to cut another 50 BPs. So he's keeping this line what already came through in the statement. The Kiwi is doing relatively okay, coming out of the RBNZ. It's a bit counterintuitive perhaps for some people when a central bank cuts 50 BPs, but it all really depends in this day and age where the level is still at. They are still at relatively decent level on their interest rates. Let me quickly go it. Oh, it's not even there. But anyway, yeah, they cut their rates to 3.75%. It's not that far away from other majors. It's really the rate path and the expectations which are going to be important there. And I guess the market was a bit short Kiwi, expecting this rate cut and buying back some. Um, Next, what did we have? We had a meeting between, and it's one of those regular meetings that we had between Ueda and Kishida, and it's going to be interesting to watch the yen moves again. Yesterday I already touched upon those, but the yields are moving higher in Japan. There was no fight back. They actually did not discuss. According to Ueda, they did not discuss the higher yields or the long-term rates with between him and Ishiba, but there's very little fight back against those yields going higher. And yesterday and on prior shows I already discussed this. We are getting closer to levels where I think that it is getting interesting for the Japanese whales to bring some money home. And I guess that we are perhaps seeing the start or being in this kind of scenario where it is possible that the Japanese whales are starting to get interested in bringing some money back home. So I guess the market is trading a bit on the back of it. We also had some comments already, if I am not mistaken, about the some Japanese business lobbies saying that they expect the wages to go up again this year. So that adds another positive positive factor or positive wind behind the yen right now. And then I come back quickly to what Trump said, and I spoke about this already yesterday. There are talks to revamp those Alaska oil and gas fields, and Japan is a partner in those projects. So this could be very interesting as well for the Japanese if Trump, as he said yesterday as well, is going to revamp those projects. And he even said that revamping Alaska would feed the whole of Asia in oil and gas. If you are a partner of the project, now obviously remains to be seen how this is all going to go in the end, whether he's going to allow the Japanese to be a partner of this. It's all going to be a bit more positive even for Japan, because still being an importer of energy for as long as all the nuclear plants are not back up and running, which is going to take years from now still, it is a tailwind for Japan, clearly. So there's a lot going on positive for the Japanese yen right now, and we've already seen that. Spoke about it yesterday. Spoke about those yen crosses, especially which are um, quite heavy, trading quite heavy. Right. What else? I think I'm through the major headlines. There is some talks in the EU, and that's the last thing I'm uh, I'm I'm, I'm going to talk about. Just the headlines before diving into the data. The EU Digital and Security Commissioner Virkkunen said that the European Commission will this year propose at least 5 packages to ease digital regulation. We know how quickly it can go in Europe. That means those packages are probably going to see the daylight in the next years, not this year, but at least they are trying to come up with some plans. Yesterday as well, on the defense side of things, um, Ursula von der Leyen said that the EU is looking at using 93 billion euros of unspent COVID recovery funds for defense. So a lot of things are moving in the EU, but we know how the EU has difficulties to agree between all the countries. So this thing could really take a lot of time before materializing. Right. Enough on those headlines. Let's see what the data have brought us yesterday. First of all, had a well, that was out during phase. We saw a setback on those housing starts, but then if you look at where they were before, we had a bumper month in the January data, which was a lot bigger, as we can see, than the prior average. So this is just a bit of a setback. I wouldn't read too much behind this setback right now. We will have to see, obviously, how this develops. But for now, it's just a setback and a bit of a give back after a bumper month. For the rest, nothing much going on. I spoke about the RBNZ press conference. Atlanta Fed GDP now, we know that it's revised nearly every week. So moving on from that one as well. A bit of a weaker 20-year bond auction did not really impact much. This being said, it just was sufficient to probably get that last little leg or that last little squeeze on the dollar, as we have seen, but from really stabilized afterwards. The FOMC minutes, same kind of impact, not a lot, barring a bit of an algo blip. As I said, there wasn't too much to be expected because we heard already a lot about from all the Fed members. Okay, this foreign bond buying. Okay, we had the week before last. These are last week's data. Okay. And we had the week before last a big number. That was the last spike in dollar yen. This number is going down. Watch this number, because if it starts to turn negative, it's going to be another tailwind for potentially for the Japanese yen. Okay. Moving on to today, Aussie unemployment data, pretty decent number. We also had mild revisions higher as well on the prior data, but very mild revisions. It's a good thing that it is a full-time employment change, taking everything, because that's a change from last month. Okay, so that is really a positive. Yes, the unemployment rate rose 0.1, but the participation rate also rose a little bit. So those two are kind of linked. And so there's not too much of a big surprise. If we start to have like variations of 0.3, 0.4%, then we can perhaps look at a new trend also. But this is still very much stable. So the Aussie did relatively well. came back from support levels as well, as we will see with the rest of the dollars. China left the loan prime rate unchanged as expected. The PBOC also came up saying that they are working on plans to revamp the real estate development market. They are building new models to support it. Remains to be seen whether that works. But in the meantime, the Chinese markets were doing pretty okay. Obviously, also helped by the fact that Trump. Refreshing. Sorry, the Trump may at some stage discuss trade with Xi. That is also support for the Chinese yuan, of course. European, here the German PPI. Well, it's Germany. It's going to take a bit of time to come off the ground there, and that for the time being is about it. What are we getting a bit later today? The weekly jobless claims. Mexican retail sales as well. The MEX back a little bit under pressure from support levels in the dollar MEX, as I may show as well a little later. So those numbers could be relatively interesting, although they are December numbers. And I just want to reiterate that since Trump took the seat and since inauguration, all those data could change extremely quickly. Jobless claims, unless we get a big variation moving on, this may be an interesting one because it's February data, and those are data from after the Trump inauguration. So we are going to find a first indication about what the manufacturing sector may think about this new Trump version 2. So this one could be could be a bit of a mover. Don't think it's a trend maker, but it could create a few waves. All right. Then we will have another Goolsby. Moving on, we will see what the oil data. I guess, yeah, the oil data should come out as well today, and we have some auctions as well again today, under which the 30-year tip auction that could be rather interesting one to watch. What else? Oh, tomorrow we will start. Tomorrow is PMI day, so that is something that we are going to look out for as well on the PMIs. They've always been movers, so get ready for a PMI day tomorrow and starting overnight or tonight with the Aussie PMIs. Right. Let's look at the fun bit, the trailers. Gold, you get on a bit of a lower, but a bit of a lower one. It's pushing on. It's pushing on. There's a few bits and bobs going on in the oil market about those physicals versus futures versus spot, etc. And some are starting to try to fish out whether or when rather these discrepancies could come to an end. Some are saying that we may get close to the end, and they are starting to they're expecting basically gold to start to slow down and maybe see a setback. In the meantime, I'm going to go even on a shorter time frame. Look at what happened yesterday and overnight. We had another Asian session of buying, and as you know, I'm always a very close watcher of what the Asians are doing with the metals. And again, they were buying, and really, whether it be technical because it's breaking levels, it's breaking the extension as well above 29.47, or whether it be flow-wise, or whether it be fundamental-wise, I personally still don't see a reason to start to fight this. Yes, there will be setbacks. We have seen one. We see regularly 30, $50 setbacks on even $50 setbacks on gold. But until we really get clarity that there is no need for a hedge against whatever may happen, whether it be on the inflation front, whether it be on the trade front, whether it be on wars getting or not resolved, until we really see fundamental changes, I think is really I don't want personally to stand in front. Now, 3K, we are now less than $50 away. 3K is obviously going to be a psychological level, but if you look at it technical wise or on the chart wise, I don't see much before 3100 really. And could it be a blow off top coming? Yeah, it could well be if there is this if it's linked to those discrepancies between physical and spot and things. It is possible that it's a blow off top and then we correct. But until this really happens, again, I see little reason to fight it. Yesterday, just to come back on a shorter time frame, yesterday there was a potential to come back down to 29.10s or so. We didn't even get there, stopped around 29.18, 19. So these are still very minor, very minor setbacks right now, okay? Until we start to break, and let's, for the argument's sake, 29.10, 20, 29, the figure. Once we start to break below there may be a bigger setback coming. But then I still think low 28s, high 27s may contain a bigger setback unless something changes fundamentally. Okay, unless something changes fundamentally. Silver. Oh, what's happening? I can't get back. Uh-oh. Here we go. Just a little glitch. Silver still working on that top end. We saw a setback there as well, but it was contained back into the 32, 30, 50 zone. As I already mentioned, this looks to be a nice hinge or a pivot little zone for me to watch in silver, and it's held again. So we continue our path higher. I did let the ad go. I'm base long also keeping some of my additional purchases here in those 31s, which are folded into my longer term position. So I'm holding that. If we start to break above 33, 35, 40, then we're probably going to have a look back at higher levels. This is rather trading the positive side, I guess, of trade discussions, potential ending of wars or so. So there's different reasons for different instruments to move, but both silver and gold are still very big. Now then, okay, before I look at the dollar yen, just looking at what's happening on the yen yields, and I'm just going to take the 10-year. I've always said that if we get close to the 150, I expect the Japanese whales to get pretty interested in starting to perhaps repatriate a bit of money, and gradually, we are getting there. Okay. Um, I'm not going to say for sure that they are going to start to really repatriate massive amounts of money because they could still wait for those wage negotiations, wait for the end of the fiscal year and do it in the new fiscal year. So we have to look at the timeline as well. So that's another possibility. But I suspect they are getting relatively interested because also if you look at the 20s and the 30s, they're also coming back to interesting levels. They are trading above 2% in the 2-year, okay? So if you take away hedging costs, it may start to be interesting to repatriate a bit of money, okay? So, and then we move over to the dollar yen. Dollar yen, euro, dollar yen, yen crosses have all pretty much made the same move, although the dollar is giving back a bit of its shine today. So yen crosses may be a little bit less obvious, but they are all on the move. So we've broken under this 150.80, 151 that I was monitoring, and we are now getting closer to the next level of support, which is in the 149.40, 149.80 zone. Depending on what happens to the dollar, we may be in for a test. If we look at it from a little longer term point of view, um, I think the next bigger level here will be in this zone here, which is 148.65 to 149. Okay, this I think could be an interesting one. It was the low of last time, and the start of of this leg higher. So this is going to be an interesting watch. As I said, there's quite a few tailwinds behind the Japanese yen right now, expectations, but also in the facts. If you look at those rates, for instance, there is good there is positives behind the yen right now. I would expect on the day um, where I was expecting to find offers on rallies the other day towards this one, but we never reached it anymore. I would expect today, if we get back anywhere close to 150.80, 151, the figure to find renewed selling interest on the dollar yen. Okay, moving over to the euro yen for Derish. Well, we're still it's still heavy, like with everything in yen related, but the euro is also finding a bit of support, you know. Hmm. I think it's heavy. I think we are going to on the in the short term we could find resistance here 120 157.30, if not closer to 158. But if it already caps 157.30, this triangle is potentially going to play out, and we could trade lower. Um, if not, keep an eye on what's happening at 157.90, 158, the figure in the short term duration. Okay. Then euro dollar. Yesterday, I was saying there was a potential to get perhaps back into the 103.90 figure zone. There are, um, I mean, those trade talks. Okay, they could be somewhere a positive for the euro, and um, I'm going to say that perhaps we may have seen an intermediate bottom here, unless we see renewed pronounced dollar strength. Um, in the short term, I think we can just stabilize perhaps. Even we need to look at what we are doing here around 104 104.50 again. It's really the bit of the pivot level for the really short term. People are still looking at as perhaps being a bullish flag also, but and I rather think that we came here on support, and then the dollar losing a bit of its shine also caused a bit of a bounce here. I'm still not a huge fan of the euro, but I'm starting to be less mega bearish on the euro right now. I still think they will pay a big price for there's a big bill coming for related to Ukraine, but I am perhaps moving on to a little less mega bearish, but perhaps moving into a more neutral stand, and the euro dollar may reflect that. Okay, I'm not excluding that we are going to trade this range for a while. Call it 103. You can stretch it to 103.70 and then up to 105.20, 30 or so. I'm not excluding that we start to trade this range a little bit for as long as there are talks ongoing, for as long as they people in Europe try to get their act together on trade, on Ukraine, whatever. I'm looking at it perhaps from a little more neutral point of view. Sterling. We had this little setback yesterday, back below this trend line. Perhaps I should just close this one, although in the meantime it did show up a couple of times again. That's around 125, 85, 90 still. But this prior high, prior low here kind of held yesterday, and we're back trading around this 126.15, making up its mind. But I think in general, it's still looking relatively positive. I will change my mind if we get back below 125.40. So I'm trying to defend some smaller longs and see if we can get back above this 126.40 already. But I don't think it's going to be very explosive if we get a move because there are still too many uncertainties. It has to go above 126.60, 70 to me to really move on into the 128s. People may try to buy a break above those highs here, but I still think there is a bit of a level here waiting 126.60, 70 before we can break higher. Okay. On the downside, I've already mentioned the levels. Euro sterling still muddling away, still trading on the lows, but as I also said in the room this morning, before we can go back to those lows here, which I think there is a fair possibility still, we need to get through this zone here. And as you can see, before we did those lows in the low 82s, those low 82s are a massive level. Okay, by the way, I've already said it, but it's never bad to repeat it. If you can see this, we had many tries in this 60-75 zone on the euro sterling. So I want to respect that. And yesterday as well, I've offloaded some because I was looking at this zone, and so I'm a bit smaller short now. I'm still a bit short. Um, pretty decent levels. I may start to look at maybe even already 82.90, but specifically if we get back above this 83.20 or so, I think I'm going to leave the ship. I'm short from a bit higher up, so that's and I've already taken some back, so that's all okay. But if we get back above 83.20, the party may be over for now. All right. In the meantime, we're still perfectly overlaying what we traded last year. Look at this perfect overlay. And so we can see a bit of a setback, which would coincide with perhaps this one, or although we could have seen this one, or we could straight away go test those lows and then put in a bigger bounce if this is a perfect overlay. Right. Next, I want to look at Canadian dollar because yesterday we were well, I mean, every day Ryan was showing this, but yesterday we were talking about this in our room. This could have been a bear flag, but I'm not a huge connoisseur or amateur of flags myself. So we traded a bit above, but then I said, yeah, your next level is 142.40, which capped roughly this trend line capped. But the major zone here is here for me, 142.70, 80. This was identified in the room by several people. This 142.70, 80. I think for as long as there is enough uncertainty on trade, we may just stick below there for now and just start to form a new range, 141 and a half, 142.70 or so, max perhaps 140.90, 141 the figure. I don't see too much of a reason now for dollar CAD to collapse, but being below this zone is perhaps good enough to give it another try. You break, bit of a setback. Ideally, we should actually go for a test and then see if we can go down. But right now we are not getting there. What do we have on the news front in Canada? And there's something going on in Canada this afternoon, but I forgot what it was. I don't think it's that important, by the way. Aussie, Kiwi, both trying. The Aussie is holding 86.20, 83, sorry, 63.25.30. Important enough, I would say. Still a bit long. Let's see if we can get up to that 63.95 64.15 is my next hurdle on the Aussie. Get through this 64.15 though. This could mean that we go to higher levels. In the meantime, I'm just looking at this. If we get back below this trend line, I'll be out with the rest of my longs. Take what's left on the table and just reassess everything. Kiwi is trying. We held after the RBNZ. We held again just below 57 the figure today, and we are trying this level again. It looks to me that we are trading a bit of a wedge here, so it is possible for me to go and revisit 57.5, if not 57.70, sort of, okay? Where I think the Euro crosses may not be out of the woods yet is Euro commodity currencies. Euro Kiwi is trying very hard to hold the 182.0515. It could. But if it starts to break, then I think we may be on our way to low 180s. And unless very bad news on risk, I think they both, Euro Aussie and Euro Kiwi, they both could potentially try for a move a bit lower. Okay, I've been wrong in the past, obviously, but this still looks to me like we could give it a little bounce to 164.30, for instance, on the Aussie Kiwi, see if it caps, and then perhaps go for the break. Because we see a little revival of the euro right now as I'm doing the show. So those are things that I'm keeping an eye on as well. Anything else, guys? Just before I close. If not, we are going to call it a day. I'm not going to talk about everything every day, but just look at what happened yesterday in the dollar Swiss. That's the last one that I'm going to talk about today. The top of the cloud. Thanks DK for reminding me of this one. The top of the cloud around 90.5, 90.45. Yeah, we had this little overshoot there up to 90.50s, but we didn't close above the cloud. So if you are a cloud watcher, watch that on the dollar Swiss. It could be interesting enough around 90.5. To see if any bounces from here are going to be kept again. And if you look at the broken trend line, it's not that far either. So we've got a couple of things to watch here in the dollar Swiss for potential tops and starting to get back down. Okay. And with that, ladies and gentlemen, I am going to call this a show. Thank you all for your presence as usual, and we talk again tomorrow. Have a good day, guys.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.